What if I told you there's a savings account out there offering 3.3% interest?
It just seems too good to be true.
In today's video, I review B2B Bank's high interest savings account. Make sure you watch to the end to find out if this bank is for you. What is B2B Bank? A subsidiary of Laurentian Bank, B2B Bank is an online-only bank available in Canada. It's a Schedule I bank and a member of CDIC. They are available all throughout Canada, including Quebec. B2B Bank works with a client's financial advisor, mortgage broker, or dealer to provide a full range of financial products. They provide a high-interest savings account, a checking account, mortgages, loans, GICs, registered plans, and other investments. But the only product you're interested in today is the high interest savings account. This account has no monthly fees and no minimum balance required. Free unlimited electronic funds transfers. Other fees include returned items, $5, non-sufficient funds, $50, early closure fee, $25, and dormant fees from $25 to $40. So if you can't tell already, B2B Bank's high interest savings account has an interest rate of 3.3%. This rate is per annual, calculated daily, and paid monthly. They've been offering this rate since August 12, 2019. So as of the release of this video, B2B Bank's interest rate is tied for the highest interest rate currently available in Canada. So who are they tied with, you may wonder? Their parent company, Laurentian Bank, which offers the same checking account, the same savings account, and the same interest rates. They also have very similar GIC rates. More about Laurentian Bank in another video. So B2B's rate is great and all, but what's the catch?
No catch. Just keep it a secret.
1. There's no guarantee how long this rate will last for. On their website, B2B Bank quoted, "While this rate is subject to change at any time, we are committed to maintaining a competitive market rate for the foreseeable future." Earlier this year, Manulife Bank's Advantage account had a promo rate of 3.35% for 6 months. With this, at least you know how long the rate would last for, even though they lowered it down to 3.25% because the base rate lowered. You could sign up for B2B Bank's rate today and the rate could drop tomorrow. So there is no certainty with this rate. Another catch? You can't get this rate if you can't sign up for it. According to many online forums, there's abundance of people who tried to sign up but can't. The application process is not functioning properly, and many people couldn't get past the Equifax identity verification. For those who did manage to sign up, the next thing you would do would be to link an external account to transfer money in, or do an e-transfer. But once again, users are having trouble linking their accounts and sending e-transfers. But apparently if you try to link an account or send money during business hours, you will have less trouble with it. On top of all this, users are reporting the website is not functioning properly. Users are not able to log in or keep getting logged out and not able to see account balances. If you're having trouble with any of this, you can call them up to speed up the process, but their customer service is lacking. So although they have a good interest rate, they might be more trouble than they're worth. Now let's compare B2B Bank to two heavy hitters in the high interest savings account game, EQ Bank and Mogo Financial. EQ Bank has a 1% lower interest rate of 2.3%. They've been holding this rate since May 2017. Although this rate is lower than B2B Bank, this rate is more sustainable. And EQ Bank has a favorable reputation amongst Canadians as a reliable high interest, flexible savings account. Mogo Financial, on the other hand, has a 0.5% higher interest rate than EQ Bank, but has a 0.5% lower interest rate than B2B Bank. The difference with Mogo Financial is they're not as flexible as EQ Bank or B2B Bank, as Mogo's Savvy Savings account only gives you 2 free withdrawals per month. Additional withdrawals cost $5. Now let's run some numbers. Let's say you had a $10,000 emergency fund in a high interest savings account for 1 year. With EQ Bank, you would earn $232.44 in interest. With Mogo Financial, you would earn $283.62. And with B2B Bank, you would earn $335.04. The difference between each account is around $51. So you gotta ask yourself,
is it worth it?
It all depends on your balance and how long you're saving for. The bigger the balance and the more time you have, the more it'll be worth it. I wouldn't bother transferring if it was less than $10,000. In conclusion, B2B Bank is offering this high interest rate to attract new customers. They likely won't drop this rate till they fix all the technical issues and bugs. But this is definitely a bait and switch. Once they iron out all the kinks and get enough customers, they'll likely drop the rate to the low 2% range and hope the customers will stay because it's an average rate. But the best part of a savings account is that your money's not locked in and you can withdraw it at any time. So if you manage to hit the B2B lottery with no issues signing up or linking your account, you can get 3.3% interest till they drop the rate. Once that happens, you can just transfer your money to the next best bank like Mogo Financial or EQ Bank. If you want to learn more about either of these banks, then click this eye icon in the top corner. Next week, I'll be doing a video on Manulife Bank, so make sure you subscribe and hit the bell icon so you don't miss when that video comes out. If you got any comments or questions, comment them below. Thanks for watching. Until next time, keep making money moves. Peace!